struggling with prop firms. Hey guys, welcome to my channel. Today I'm going to be breaking down the methodology behind my break and retest strategy. It's not the strategy I always use, but I'm using it recently just because 70% of the time because of just the results I'm been getting. But I'm going to be breaking down the way I trade. Okay, now if I look at quickly again without wasting any time, by the way guys, I have listened to all your comments and the demand I've been getting on social media, and the decision on mentorship or providing courses or signals. I won't be providing signals and I won't be providing courses for the time being, but I will be providing mentorship. The link is in the description if you want. I'm giving an exclusive, guys, not for everyone, and I won't be taking that many bookings. If you want one-on-one mentorship with myself, and we can do Zoom calls, I can break down your charts. If you've got any question, we can go over it, and just trying to help as many people as possibly can. But this isn't for everyone, meaning limited spaces, limited seats. So yeah, just check that link in the description, and yeah, get your bookings. And I'm only going to be paid for my time, not I'm not trying to make profit or money or anything like that. It's just trying to give back to the community. That's all there is. Anyways, okay, back to the breakdown of the chart. Okay, so what I like to do first is start on the bigger time frame on the daily, and as you can see, I got this Wick rejection, this red line. The red lines are my dailies. So I've got multiple Wick rejections here. We've got obviously rejection here where price comes up and then turns bearish and just drops. We got Wick rejections here, and obviously we've got this red line here, Wick rejections, obviously equal high here. We've got rejections here. This was in the past that I drew. The blue lines are the 4-hour time frame. Now obviously a tip for you guys is if you don't know how to draw your zones, you consult with the bigger time frames. For entries, if you don't know whether to enter or not, consult with the smaller time frame. Now that is a bit trickier, easy said than done, because sometimes the small time frames are not that exact, like meaning the entries are not that, because small time frames have less value. The best way to easy way to put it, anyways. Okay, so 4 hours blue lines have drawn. Obviously got these rejection zone area here, which you got rejection here, Wick rejection here, and now price is entered the 4-hour key level, which has a lot of value. Then we got the 1-hour time frame where we can obviously get a clearer picture, and you can see that once this support rejection wick was created, even in the past on the 4-hour time frame, when price came down here, right, this gives an opportunity for a buy. And I'm going to talk about last week we got two opportunities of a buy, which was gives a total of almost 11%. Now on a 100k account, that's 11k. On a 200k account, that's 22k. So the numbers are absolutely great. I mean, even on a 10k account, right, the numbers are are nice, like 11%. That's $1,100 what in one day. Can't argue with that. Now the reason for the entries, right? Okay, price was falling here. Now I knew that I was entering a major 4-hour time frame. Now if you look at this bullish candle here, let's break this down more, and I turn on this indicator. Just one moment. I will use session indicator and the just to see the candle strength. Look at this, 98.59% bullish. I would wait. Okay, now I know, okay, this level has a higher chance, not 100% chance, a higher chance to hold. The price, we're now waiting for the retest, price to come back down, and looking for a better opportunity to enter, and I get that entry after this bullish candle is formed. Then you can just take, but even here, this would be, if you would have waited patiently, this would have been a better entry here. But I believe I took an earlier entry. I think I entered after, just obviously from back testing, I knew statistically the numbers were in my favor. If I took the trade for at this point, and I would get a nice 125. And then what happens is another entry. Just one moment. Another opportunity presents itself. Why? Look at this. If I get rid of this one, 92%. Price closes above the daily. Remember the red line above the daily major key level. Price closes above. And when it closes above, it gives me another bullish candle with 78%. Not the best, but you know, it's not the worst as well. It's above 50%. So then what I do is I'm like, okay, you know, this is another opportunity to get in. I'm already up 5%. If I lose the trade, I'll be up 4%. I take the 1% trade risk, and then I get another 5.4. So that was basically the ideology behind the trade for the 2 trades. And you know, it was now if I would have lost the trades, it's okay, you know, you have to be, if I would have been down 2%, but I wouldn't have taken the second trade if I didn't win the first trade. That's the idea, guys. If you lose the first trade, you're done for the day. You come back the next day, and just because your trade didn't work out the first day doesn't mean it won't work out the second day. Simple as. So okay, now okay, let me just clone this and put it back where it should be. Okay, now price now currently, and we get opportunities even for today. I did not trade today, but a nice opportunity would have been this 4-hour level here. Now what is the difference between when price once came here 4 hours and now price has come here on this 4-hour blue line? What is the difference now? The difference is, guys, the second once price came down and closed, now normally we should wait for a, you know, retest, but look at this, it closed bullish with this candle, right? This for me is like, nah, I want no part of this. The second time it comes down, it closed below. Not only that, guys, look at this wick rejection here, meaning buyers pushed up a little, right? A little bit of rejection. Look, there's no wick rejection here. Buyers couldn't push it up, but even when it came up, now even though you get this strong bullish candle here, long wick rejection, don't be like, oh no, price is going to shoot up. Remember, it's happening in no man's land. So it happened in the gray area. Look at all this gray area. This is no man's land. If it would have happened on near this, then I would be like, okay. So anyways, it just done this, it got a fit of rage, if you want to call it, the buyers, to push price up here. Price came back up here, got this wick rejection closed below, and that is a proper break and retest. If you break it down to the smaller time frame, and look at this, price comes up, you got a wick rejection, strong bearish candle. So now you can take a sell trade, because now you got your now obviously the third candle here is now bullish again, and don't get scared now. You'll be like, oh no, you know, maybe it's gonna push up. No, sometimes price creates a wick, sometimes you know, it might close bullish, but you have to have faith in your analysis, in your back testing, in your, you know, trading, in your edge. You have to have, you know, full complete faith in your edge. I mean, even when you look at this trade here, ping pong style here, bouncing down, up, and then just down. Now you could take if you took a buy from here, because of this candle here on the daily level, if price would have come up, you would have probably, if you would have broken even, put the stop loss at break even, you would have been okay. But you know, eventually, or you would have even probably lost the trade. I would have been out at this moment, then I would have been done for the day. But this happened around 8:40 today. This was London Open, around London Open. London Open is about UK time, about 7 AM. Price comes up, then you get this opportunity here to sell again. Now you would have made probably 1 to 4 here, and another opportunity comes here. So you would took even 1, 2, 3 trades just here. I sell here because this tweezer pattern bearish, a bullish tweezer pattern, and look at this, guys. In all 3 trades here, price does not close above this line. If you look at these 2 rejection tweezers, price doesn't close below this line. Look, only wicks close, only the wicks touch it, not price itself. This time when price does close here, don't just buy off after this bullish candle. No, wait for the next candle. Check, see if it's going to be this candle here, bearish, close below. Price comes up for a little retest on the, if you want to call it. If you break this down to a smaller time frame, let's see what it shows us. Let's see if we can break this down even more. Look at this, guys. I'm guessing it's this one, right? Go back to the, okay, it's this one. So let me get the time right. 210. Okay, this level, right? On the smaller time frame, look at this, guy, it never closes above the line. On the bigger time frame it did, on the smaller time frame it didn't. So we get this clean, look at this strong long wick rejection on the bullish. It's a bullish candle, but it just shows that, you know, sellers are more in control. We get this bearish candle here, and you know, after that the rest is history. And look at this bearish candle breaks the low of the previous high candle, which is this one, and it just collapses there. That would have given a nice, you know, long, you know, a nice RR trade, risk to reward. It would have been a nice entry. Now if we look at currently where price is at, right, Now where currently price is at. Now look at this, guys. We're getting Wick rejections. Price closes bullish. This, look at this. Okay, this is where currently price is at. I'm done for the day. I was actually busy. I might actually, let's just see how this goes. All right, I might even take this 90%. I'm not going to take this because I'm actually doing something else. Quickly came here to make the video. Okay, look at this candlestick here, guys. This one bullish 91%, and it closed above the line now, and it's touching the line as well. So it's not no man's land anymore. We get this 100% bearish candle, right? Closes below, but now we got 91% closed above. So forget all this. This is all noise. Remember, it's in no man's land. We care what price does here. Look, Wick rejections here. Price close bearish. Now we want to see in 12 seconds. Let's see what in timing. In 10 seconds, it's lagging a bit right now. Let's see in 10 seconds what happens. This candle's about to close, and we can take it from there. Okay, it's closed. So let's just say we take a buy. I want some kind of retracement. Remember, candles will always do that. Remember, I do about 7 pips. I'm not actually taking even this trade. I'm just doing this, but this is live. We can get a nice 1, 2, 3. And if I lose the trade, we don't care. I know obviously I'm using this. I'm not actually placing any, on my prop firm trading account. But that's fine. So, if we go down to a smaller time frame. If this was to go against me, it's okay. Now we are bearish quite strongly, so anything can happen, because obviously we're in a downtrend. It's not the strongest confluence to take a buy, but the only reason I'm like, look at this bearish candle here, so I mean, okay, now this could even be a retest, guys. So just one moment. My advice would be, because I'm just going through this with you guys, right? My advice would be now is get this, you mark another level here. Now we'll cut the different, it's not the 4 hour or the, let's call this purple, or where you can see better yellow. We take it to a small time frame. Now price, what it might even do is it might come up here. Might come up here, right? Retest this area and just collapse straight down. Because remember, we're in a downtrend. But what I, just get rid of this. So two things now. It's a game of probabilities though, right? I don't want to fight this, even when we go on the bigger time frames. This is a clear downtrend. I don't want to fight this, guys. But this can easily just shoot back up, right? Because price can do whatever the hell it wants. It does not care who you are or who I am. It's a game of probabilities. But let's just say, guys, we are gonna go off our original plan, right? Can't just back up the trade like that. Let's just say we are gonna go our original plan. I think price will come down like it normally does. It likes to some kind of retracement. But let's just say, guys, here 1, 2, 3, right? Because we got one rejection here from support, second rejection here from support, third rejection here from support. So I would pretty much say, yeah, I'm gonna hold on to this trade. Got 3 rejections. Now even if we still lose the trade because the trend is against us, it is what it is. The only reason I'll be looking for a sell if it breaks the low of this candle, and I mean, it's only a small 1, 2, 3 or risk to reward trade, but see how it goes. I'm not going to be here for the full trade because we don't know how long that might take. We are near the end of the day on a Monday, so volume is going to be lower. But if you know exactly where this trade is, you can probably check in the future. But yeah, guys, if you wanna, you can look at GJ and just see currently where it is, and see if we lose the trade, we lose the trade. If we win the trade, we win the trade. It is what it is. Okay, that's it from me, guys. Hope this was helpful. Hit that like and subscribe. And if you are looking for mentorship as well, the link will be in the description. Take care. I'm out.